All right. Welcome, everyone. Thank you for joining us here on the next edition here of the Franchise Your Business webinar series. My name is Tom DuFore. I am the founder and CEO of Big Sky Franchise Team, and I am leading today our session all relating to current franchise sales and marketing trends. Now, if you've been with us before, you're probably familiar with the format. It's pretty consistent. We do have a few little new nuggets to come in and add. But if you are not familiar with our program, if you have not been here before, well, this is a session that's going to cover some high-level macroeconomic data and slowly drill down into small business and franchise-specific economic data and just talk through how that might be impacting your current franchise sales or current marketing efforts, or what you might be thinking about to tweak or change some of those. So I am going to go ahead and share my screen so that we can go ahead and get started. I will pulling up my browser here. Just give me 1 second. Okay, and our first chart on the list. All right, so we are back and just about to share my screen here, and let's go ahead and see if we can get this to work now. All right, here we go. So the first screen that I always like to look at is a report from the Institute for Supply Management. It's their report on business, and they have 3 reports now. The first is the manufacturing PMI, and I really like this because manufacturing tends to be a leading indicator in terms of where we're going. And what's worth noting over the last almost 2.5 years, as you can see, is that since about March or so of 2021, you can see that the Purchasing Managers Index has been on a steady decline for about a year, almost 2 years now. And so we are now in March this is from the most recent data available, and it showed that it says the U.S. manufacturing sector contracted in March as the manufacturing PMI registered 46.3%, 1.4 percentage points lower than the reading of 47.7% recorded in February. This is the 5th month of contraction and continuation of a downward trend that began in June of 2022. Of the 5 sub-indexes that directly factor into manufacturing PMI, none were in growth territory. This month, the PMI registered its lowest reading since May of 2020. And here's why this matters, is because for this section here, typically manufacturing is a leading indicator. So if manufacturing's down, well, chances are 6 to 12 months thereafter, the rest of the economy is going to start feeling that. So you can see that this is starting to impact, and part of the rumblings you've heard over the last many months about potential recession. So that's on the downside. Now we have services. And as you will be able to see from a lot of these reports, you're going to see that it's rather mixed in terms of positive and negative looking data. So this is report number 2. This is the Institute for Supply Management Report on Business Services PMI, which is Purchasing Managers Index, is at 51.2%. And so in March, the services PMI registered 51.2%, a 3.9 percentage point decrease compared to the February reading of 55.1%. A reading above 50 indicates the services sector economy is generally expanding, and below 50 indicates it is generally contracting. So as you can see here, it's right around kind of that break-even line for the economy. So it's okay, but it is right around that middle number. So rather kind of in the middle. And then we have our hospital PMI, and it says hospital PMI is at 53.4%. And you can see in 2021, if you end up just listening to this and you're not seeing the visual, 2022 was for this PMI index was basically like a jagged line, up and down and up and down and up and down all year long, big swings up and down. And here we are in 2023, and it's been relatively flat, right around that 53, 54% index rating. And so that just means that more than half of the purchasing managers are indicating that they're planning to continue to buy things and keep things moving. So again, it's relatively mixed here. So you can see it's, above 50%, which is good. It's solid. Services is the same. And then we have the manufacturing PMI, and it is under that. All right. Next, we're going to talk about the unemployment rate. Always a big topic. And this is a report from tradingeconomics.com. This is their unemployment data, and their data that comes from the U.S. Bureau of Labor Statistics. I just find their website easy to use and pull up as some reference points. So you can see that for March of 2023, the unemployment rate was 3.5%. So it continues to hover very low, and it seems like what I've heard and seen from others that underemployment tends to be the main concern here of getting the number of workers back into the workforce. And then I want to look at inflation. So this is Trading Economics again, and you can see the steady drop here since the 9.1% inflationary reading in June of 2022, that it's slowly been coming down. It was 5% last month, and 5% compared to 9% is definitely better, right? It's definitely better. However, when we still look at this over the course of the last even 10 years, it is substantially higher than any other point outside of the last 2 years. So you can see that 5% is still very, very, very high for inflation. And pricing, in my opinion, is still going to take some time to sort itself out as inflation hopefully subdues and over the course of the rest of this year. And we're able to finally get some stabilization in some pricing mechanisms for manufacturers, retailers, food service, for service businesses, professional services, and the like here. So just things for you to know. I would say for inflation, and as with all things, as inflation is high, just a reminder for your franchisees or prospective franchisees, every day they wait to, for example, open their business or take out a loan or go through that, the money becomes worth less over time because inflation is devaluing $1 today. So it's worth less tomorrow. I mean, it's worth 5% less this month over this time last year. So it's already decreased in value. So if you had $1 1 year ago, it's worth 95 cents today. And so just by way of inflation there. So just to put that in perspective, and the cost to borrow money continues to go up. And so you want to encourage franchise candidates, if they are serious, that the sooner they get started, the better to get this in. And this is a message that I've been talking about for a couple of years as inflation has gone up. So just keep that in mind as you're talking to your prospective candidates in that regard. Next, we're going to take a look here at the University of Michigan's survey of consumers. They've been doing this for many decades. So this is the index of consumer sentiment. And here's what it's looked like for the last 50 years. This is the last 50 years. And you can see these readings as it's slowly trended down and then up. It trended down in the 60s into the early 80s, and then it bounced up into the 80s, into the 90s, and then it really fell down during the Great Recession and rose up from about 2008 on up to 2000, right around 2019, 2020, and then it really fell off during the pandemic here. But we do see that it is slowly starting to come back. I'm going to zoom in a little bit on my screen, and you can see that the reading is somewhere, it looks like right around 65% or so for the month of March. So it's on its way back for consumer sentiment, which means hopefully that consumers are feeling more confident about spending money in the economy. So just worth noting. Next is the number of new business startups. This data is from the U.S. Census Bureau. It was released in April 17th of 2023. And this was released here earlier this week, just a few days ago. And it says the U.S. Census Bureau announced the following seasonally adjusted business application and formation statistics for March of 2023. The business application series described the business applications for tax IDs as indicated by applications for an employer identification number through filings of the IRS Form SS4. The business formation series describe employer business formations as indicated by the first instance of payroll liabilities for the corresponding business applications. And what you can see here is that the total number of business applications is up 4.5% month over month. So that means it's up 4.5% over February. And you can see that the total is at 451,000 new business applications, which is just incredible to me. And this chart is just always mind-boggling. Every time I look at it, you see a big uptick here the last month or two. Here it is in March. It really surged. It's one of the highest peaks it's been at in about 2 years in terms of number of applications. And I just really like showing that from roughly 2011 on up to the start of 2020, new business formations were ranged from roughly 200,000 to 300,000. It was a slow and steady increase from about 200,000 up to that 300,000 over that nearly 10-year time period, 9 or 10-year time period. Then COVID hit and things dropped. And then a huge spike occurred in mid-2020 to over 500,000 applicants. It dropped down a little bit. And then by 2020 into 2021 and beyond here, it's been over 400,000 new business applications occurring. So that's a 33% increase sustained over a 2-year time period. It's incredible. So my reason in saying that is people are thinking of starting businesses. So it is happening. So even if that person or candidate or those folks you're talking to may not be giving you buying signs, it's there's something in the air, there's something in the water, whatever phrase you want to use, but people are interested in doing this and starting new businesses, just so that you are aware. The next report that I'd like to talk through is the U.S. Chamber of Commerce. They produce what they call the Small Business Index report, and they do a quarterly report to showcase what is happening and their findings. And so it says that this quarter, and this was for 2023 Q1, it said the index is down slightly as small businesses see a weaker economy. It says 54% of small business owners continue to cite inflation as their top concern. This quarter, small businesses can you hear me okay? Okay, it looks like we just had a small technical glitch here, but I think we are back. Zoom kicked me out for some reason here. So back to the Small Business Index by the U.S. Chamber of Commerce. And it says this quarter, small businesses' concerns over inflation remain at record highs, and their perceptions of the economy have slightly dimmed, according to the latest MetLife and U.S. Chamber of Commerce Small Business Index. However, most small business owners continue to feel good about their own business health and cash flow. So what does that mean when they're stating that? How do you interpret that data? Well, to me, what it's saying is that while small business owners are overall concerned, they're a little nervous about the general direction of where the economy is going, citing inflation as their top concern, the overall health of their small business is generally positive. So at the super micro individual owner level, sounds like things are going pretty well. But the concern of the franchise candidate, of the small business owner, for the bigger picture, they're a little more timid on that. So I think that's the takeaway out of this quarterly report. All right, now let's dive into the franchise insights Small Business Startup Sentiment Index. I love this report. And this is interesting. It says aspiring franchisees, and this is, by the way, this is their April 5th, 2023 Startup Sentiment Index, which was they conducted a survey between March 23rd and March 30th of 2023, and then aggregated the data in this report. And it says aspiring franchisees leave the pandemic behind. 55.6% of survey respondents more likely to launch than 3 months ago. And now only 11% specifically prefer pandemic resilient businesses. So I think that's worth noting and is pretty interesting. It says in March of 2023, 53.7% of entrepreneurs surveyed say they are more likely to launch their startups than 3 months ago. Further, 55.6% of survey respondents either agree or strongly agree that now is a good time to start a business, down slightly from the prior month, but significantly down for the record high of 76.9% in June of 2021. FranchiseInsights.com compiles monthly the Small Business Startup Sentiment Index of individuals who have recently inquired about businesses for sale. So let's go down and take a look at a couple of reports that we like to take a look at. So here's one worth noting. What is the biggest factor into starting a business? The question is what's their biggest concern or factor into determining if you're going to start a small business or not? Well, the number one factor by large, 63% of people say that access to funding or credit is their biggest concern. And with most things that we talk about when we get here each month, this has been consistent. Access to funding or credit's been consistent as the number one concern for budding entrepreneurs for many, many, many months. And so despite all of the economic and COVID situation, funding is still their number one concern. Number two concern is economic climate. So about 1/3, 33.3% of all respondents said that economic climate is of concern. That means 2/3, it is not as much of a concern. They didn't reference that. And then we have all of the others. A recent little mini spike here is tax law changes. That jumped up to number 3 on the list, and that's at 20.4% of folks responded that tax law changes is of a concern. I don't know if that has any connection point with the fact that a lot of folks are filing taxes at the end of March when this survey was done. They've got taxes on the mind. Don't know if there's any correlation there, but it's just worth noting that it kind of the timing of all of that. So we'll see if this remains consistent as number 3, third most interested concern for people being surveyed as we look at next month's data. Next question, how has the pandemic affected your interest in business ownership? And it says 33.3% said no impact. 27.8% said it boosts their interest in controlling their own destiny. 11.1% says it makes them favor businesses that would be resistant to pandemic. 38.9% said it reduces the amount of capital they have to invest. And 7.4% said they've decided to put their business ownership startup on hold for now. So that means out of all of the respondents, about 7.5, almost 7.5% of people said, I'm just going to put it on hold. That means almost 92.5% of respondents are not putting it on hold because of it. So kind of interesting to look at it from the opposite side. All right, next report from the Franchise Insights. This is one of my favorite reports that they publish every single month. And you can see that it says the top prospect motivations for franchise ownership in Q1 of 2023. Number one, far above and away, is be my own boss at 87.4%. This has been consistent for the several years that I've been tracking and following this through Franchise Insights. Be my own boss has hovered right around 90% consistently. Income potential is number 2 at 65.9%. Lifestyle rewards is number 3 at 49.8%. Side business to supplemental income, 46.9%. And tired of climbing the corporate ladder is 33.6%. So those are the order. And so if you're thinking about how your marketing might want to be positioned as a franchisor, well, I'd be tugging on the heartstrings of being your own boss, number one. I'd talk about income potential. So if you have an item 19, talk about it and talk about that income potential that you share in your item 19. And then if someone's able to create a nice little lifestyle or create a better lifestyle, or that it can be a side business to supplemental income, talk about those. That's the order. And those are the 3 or 4 items that I would be looking to reference or talk about, because it's going to resonate with the vast majority of the prospects that are exploring franchise ownership. Here's a new report that came out, which is interesting. It says post-pandemic migration, and this is on franchiseinsights.com, by the way. It says post-pandemic migration shifts franchise prospect interest northward and eastward. So change in share of franchise interest from Q1 of 22 to Q1 of 2023. And you can see here on this map some of the interest change. You have Florida in bright green, Georgia in a darker green, and green means increased interest. North Carolina, New York, Illinois, Wisconsin, Utah, and Nebraska are all in an increase there, and you see some decrease occurring really throughout most of the other parts of the country, with Mississippi, Louisiana, Arizona, Nevada as being brighter red on this report in terms of losing interest. All right. Next is from franchiseinsights.com as well. And this is by Michelle Alston for Franchise Insights. And it says, aspiring franchisees leave the pandemic behind. It says, do you agree that this is a good time to start a business? And we walked through this data just a moment ago, some of this data a moment ago, but it says in March of 2023, 53.7% of entrepreneurs surveyed said they are more likely to launch startups than 3 months ago. So just worth noting there. The one other point or new research that came out between now and our last session is that the International Franchise Association published their 2023 Franchising Economic Outlook report. And we'll do a separate session just to talk about this. But just worth noting here is this first. I'll just do the quick summary for what they put together. So the number of establishments was estimated at just over 790,000 franchise establishments in 2022. It's projected to grow to just over 805,000 establishments for a growth rate of about 1.9%. It's showing employment increasing, output increasing, GDP increasing to franchising accounting for over $521 billion in gross domestic product. Key factors worth noting that they talk about is that service-based industries and quick service restaurants will witness higher growth than other industries in 2023. And it says Texas is expected to witness the most growth in franchise activity in 2023. Growth in the southern U.S. will outpace the rest of the U.S. franchise market. So those are their key forecasts, some of their key forecasts for 2023. And lastly, something just worth noting. By the way, let me go back to this. So what we can take out of this for this projection is that if you're in the QSR business or restaurant business, looks like service-based industries and QSR, if you're in those segments, be ready. The IFA is predicting a growth year for you. So recognize that that's coming your way. And then Texas is expected to witness the most growth. So, and the southern U.S. will outpace. So if you're looking to expand, wondering where the interest is going to be or where it might grow, I'd be thinking Texas, and I'd be thinking the southern U.S. as a place to go. If you're saturated there, well, then you're saturated. But if you're looking for a new area of focus, those would be the areas you may want to be targeting coming up here in 2023 or for the rest of 2023. Now, finally, this is an article from the JD Supra and .com, and this is shows a blog post that was put together here. It was written by Hogan Lovells. And it says U.S. Supreme Court clears a way for constitutional challenges to FTC and SEC. So I'm only going to read the first little heading here just to give you an overview. But it says April 14th, 2023, the U.S. Supreme Court ruled in a unanimous opinion in Axon versus Federal Trade Commission that certain constitutional challenges to Federal Trade Commission, FTC, and Securities and Exchange Commission, SEC, administrative enforcement actions can be brought directly in federal district court, allowing parties to bypass in-house agency adjudication processes and expedite federal judicial review of challenged agency proceedings. While the court did not address the substantive merits of the constitutional challenges leveled at the agencies in this case, the decision will provide parties with a fast track to federal court for adjudication of such challenges, which have the potential to fundamentally alter the nature of the agency's enforcement authority. So the reason I reference that and just wanted to make a highlight is that Federal Trade Commission oversees franchising. And so what does that mean? Well, it means that the Federal Trade Commission, SEC, these organizations may be in a position where some of their authority or power may be diminished. I don't know. It seems like it could go that direction based off of that ruling. So what actually happens remains to be seen, but it's something worth noting for you as we're all in franchising, and impacts to FTC are going to impact the franchising industry and the franchise community at large and what we're doing here. So that is the session here today, folks. If you have questions, comments, please make sure you type them in here. By the way, before we go, if you have not subscribed to our podcast, Multiply Your Success, or our Franchise Your Business podcast, please go ahead and subscribe on your favorite podcast listening service, whether it's Apple or Spotify or Pocket Cast or whichever it may be. And we will publish this and have this live coming up over the course of the next few days. Thank you so much for being here today. So grateful to have you. Have a great weekend, great rest of the day and a great weekend, and look forward to having this session here again next month. Thanks, everyone. Talk to you soon.